Welcome to Drill on Earnings. We have quarterly results out from ARM. This is one of the 50 most important companies in technology. It's why we cover it here at Epistrophy Capital Research. I'm Chief Market Strategist Cory Johnson. And the ARM quarter was pretty good, certainly better than Wall Street expected, both in terms of revenues, which were $983 million in the quarter, and 39 cents in earnings per share. But the stock trading down, why? Well, let's take a look at the business here. So 19% growth, as I mentioned on the top line, pretty good for this company. Not the best they've reported in the last year, but you can't complain about 19% growth no matter what's going on here. And a nice profit line, whether it's gross profits, operating margins, whatever. Operating margins are slowly improving for this company, up to 18% in this quarter, very seasonal business. And their license growth growing at 60%, very bumpy on a year-over-year basis. The license and other line in their income statement bouncing around to the upside. But their remaining performance obligations, because you can think of this company, even though they design chips, something like a software company where they know how much is coming in the door in the future. It's a more predictable business in some regard because they have these remaining performance obligations. And those numbers were actually negative, down 3%. Well, what does it mean? It means that we're looking maybe at some kind of a slowdown or certainly not great growth in the smartphone business. You can see it in Qualcomm results. Please check out our Qualcomm earnings report subsequent to this. If you're watching this one first or if you're watching this one second, hey, we're just glad you're watching. But when you look what happened when they started talking about what's going on in the smartphone business, it was not as exciting as investors wanted. Stock down 7% in after hours trading after a 132% rise in the last year. So a fantastic move in this stock, and maybe a lot of that's about AI, not smartphones, but both so important in this company. And the smartphone business is what we've got our eyes on right now with their ARM v9 and their CSS chip designs really being picked up by smartphone makers all over the world. MediaTek's Dimensity 9400 has got some of those cutting edge chips in it, as well as smartphones from Oppo and Viveo. But nonetheless, the numbers and the guidance wasn't what they would have expected. And I think one of the reasons is there's such excitement about the possibility of AI on our phones, but it's not there yet. Why? Well, the design time is so long when changes are so immense, like adding AI to phones. And indeed, you're going to hear a reference to small language models, not large language models. I think it's something we're going to hear a lot about in the near future. But small language models coming to smartphones just aren't there yet because the chip designs are still a few years old. And the newest chip designs, while they might roll out over time, aren't here now. According to the company, maybe not going to be right around the corner. A little disappointment for investors. Here's CEO Rene Haas.
We get lots of questions about the smartphone market and the AI capabilities to harness what's going on inside there. You have to remember that these smartphones were designed, the chips for these smartphones were designed 2-3 years ago. The memory subsystem, the power, everything was predefined. So to be able to fit these small language models or anything that goes inside the phone is quite a challenge, given the fact that you still have to run a display, you still have to run an operating system, you still have to run apps. So what helps address that? Getting products to market faster. And that is really what we're very focused on.
So getting products to market faster, we're all about that, but ARM's not quite there yet with the latest chip designs and the latest cell phone. So what's it all mean? What's your big drill on earnings takeaway? And what's one number that tells you a whole lot? Well, Q3 results from ARM tell us a lot. They tell us that revenues were up 19%, and that's really good. It's a very profitable quarter for the company. But the drill on earnings bite, the one number that tells you a whole lot, tells you that the remaining performance obligations, that is the business that they have yet to perform and how they book that can almost be seen as a future indication of revenue growth. That was down 3%. So revenues are up 16%, but RPO is down 3%. That's not good for the future, the immediate future for this company, because the smartest smartphone chips from ARM are not getting into phones in the size that they would like right now. All right, thanks for checking out Drill Down Earnings. Please subscribe to us somewhere on X or TikTok or Instagram or YouTube, and check us out on @DrillDownPod. I'm Cory Johnson.